Hi everyone. Today we're going to talk about what technical analysis is. Now when you first hear the word technical analysis, it might sound like some super complicated technical process. But in reality, it all breaks down into simple lines on a chart. I'm sure all of you have seen these images when Googling the word stocks. And all those fancy lines you see, that's what technical analysis is. So what's the definition? The definition of technical analysis is a method of analysis for forecasting the direction of prices in an asset through past market data, technical indicators, and chart patterns. In other words, past market data basically uses the current chart of an asset to predict the future chart. Technical indicators and chart patterns are tools that tell you which way the chart will move, and we'll go more in depth about these topics shortly. So this method of technical analysis can be used on any asset. This includes stocks in the stock market, cryptocurrency in the crypto market, and foreign exchange market, where international currencies are debated. So that's like the United States dollar or the euro or the pound. Now, technical analysis is really only effective in the short term. That can range anywhere from 12 months to within minutes. Anything over the short term cannot be predicted effectively using technical analysis. Now let's take a look at some examples of past market data, technical indicators, and chart patterns. First, past market data. In this image, we have the 3-month chart of the S&P 500 index, which charts the performance of the stock market. You can see over the past 3 months, the value of the S&P moves almost perfectly between the red and blue lines. Well, if we extend the red and blue lines, we can infer that the S&P will continue to move between them, and meaning it's almost guaranteed to increase in value over the next month. Now we extend the image. The black line is where the previous chart was cut off. You can see that after 1 month, the S&P continues to move up in between the two lines. So this is an example of using the chart in the past to predict the future. Next is an example of a technical indicator on the 3-month chart of Bitcoin. Bitcoin is probably the most famous cryptocurrency right now, and I'm sure all of you have heard about it. The indicator we'll be using for this example is called the RSI, or Relative Strength Index. It is a very simple indicator. So the RSI tells you if an asset like Bitcoin is overbought or oversold. If this line goes past this purple zone, Bitcoin is overbought. If this line goes below the purple zone, Bitcoin is oversold. Now on the left, you see the current price of Bitcoin is at $58,000 a coin, and the RSI is towering over the purple zone. This indicator clearly tells you that Bitcoin is gaining value for no reason, and it has to come down. We extend the image, and once again, the black line shows where the previous chart was cut off. After hitting $58,000, Bitcoin tumbled all the way down to $42,000, and this was all predicted a month in advance by the RSI indicator. Finally, this is an example of a chart pattern on the value of gold, which is traded on the foreign exchange markets. And this chart is taken from gold in the 1-hour time frame. So this is a very short-term time frame. And this chart pattern here we're going to be looking at is the bear flag, and it's pretty self-explanatory. This is what the bear flag looks like. And if the chart of gold matches the bear flag, we can see that gold is probably going to go down. You can see in the chart, the price of gold in the 1-hour time frame is following very closely to this bear flag pattern. So these arrows show which part each candlestick matches to. And if we extend the image, you can see that the value of gold did fall dramatically by forming this pattern called the bear flag. And we can predict this beforehand by observing this pattern and inferring that gold is most likely going to lose value. So lastly, how accurate is technical analysis? Nobody can actually predict the market with absolute certainty, but technical analysis gives you the best chance. It has its limitations though. Technical analysis really only works in the short term because in the long term, other factors like popularity of the asset, market control, and economic health come into play. These are not considered when running a technical analysis on a chart. Also, technical analysis only works in normal conditions. What I mean in normal conditions is when the asset is traded purely on supply and demand. For example, let's say Bank of America announces bankruptcy this morning. No matter what your technical indicators, chart patterns, and market data tell you, Bank of America stock is going to go down. The impact of the news influences the supply and demand of Bank of America stock, so technical analysis no longer works. And this is an example of an abnormal condition. So that's it for this video, and I hope you learned something today.